The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
All right, welcome to the COB. Nadine Blaney has joined me.
Yes, I have. Nice and warm in this studio. I hope you're all staying warm out there on a day. Well, it hasn't been the best day for the local market.
But you know, the SIBO kind of turned positive just on the close, but the ASX 200 more broadly, definitely a little bit of a lackluster day. I mean, we've got the June 19th holiday coming up, so Wall Street will be closed. Potentially a little bit of, trepidation ahead of that. Mark Gardner is our guest coming up. He just said not much is happening and potentially might not happen over the next couple of weeks. Of course, we're heading into the end of the financial year as well.
Yeah, we are. So we've got some tax loss selling happening out there. We've got a few companies still confessing, mostly in the smaller end of the market now. But making our way toward earnings season, so it does get quiet sometimes on the corporate front, and CEOs aren't really, too keen to talk unless they've got a price-sensitive announcement out. But we are here each and every day bringing you everything you need to know about the day that was. So with that in mind, we've got a few key themes here, and one of which that has really captured my imagination is this whole going nuclear. We've got Peter Dutton out with the coalition's plans should they be elected.
And you wrote a really interesting piece on some of these uranium stocks as well. There's been some big calls for the likes of Boss Energy, Paladin. We're going to talk about that with Mark as well. Historic heavyweights.
That's coming up with Mark as well. So think about NVIDIA. Think about how hard and how fast it's run. I was doing a bit of reading today, this is an emotional sentiment sort of driven. I saw a tweet. I mentioned it earlier, but it was hilarious because they was talking about, analysts on NVIDIA, what they say, and then, what NVIDIA does. And it just had this picture of Snoop Dogg with with a cone. Anyways, I digress. And we get to some of the sectors, I suppose, that,
It was hard to sort of find a theme today, I would say. But let's have a look at the miners. I mean, Fortescue did come back after that sell down, which was because of that block trade. James Gerrish from Shaw and Partners saying that he reckons that we found a floor for Fortescue now. BHP off a little bit today, and I think the banks, having a look at them, were pretty flat today.
Bit mixed. You've got NAB higher, but it's, I suppose, no surprise if we see some selling in Commonwealth Bank. The banks were up at record heights yesterday. Macquarie, though, still looking good, up by 1.4%. Elsewhere, I mean, we might talk about it a bit, but energy, Woodside was up by 1.25%. Still, though, couldn't lift this broader market in any sort of significant way, at least.
Yeah, and you mentioned going nuclear, some of these, and uranium stocks, renewables rising. Federal opposition leader Peter Dutton pledging 7 nuclear power plants by 2050.
Yeah, a QBE, it's actually hit a 3-week low in this session on a downbeat earnings forecast, flagging the closure of its struggling North American middle market segment. Analysts at Citi have already weighed in. They say the forecast looks softer and slightly lower than the consensus view as well.
And Dexus Industria REIT dropping on, or actually rising today, but there was a property devaluation, flagging net property devaluation of 30.7 million in the 6 months to June.
In the smaller end of the market, and this is sort of speaks to the slow news day that it was on the corporate front, Change Financial has jumped on a record revenue forecast. It's expecting revenue with payments as a service revenue to continue to increase, up by close to 15%.
And Gale Pacific there down 7.4%, falling on an earnings view downgrade, undertaking steps for cost reduction moving into full year 25.
Stock of the day was Helia Group, shares down significantly. The lender's mortgage insurance provider advised by the CBA that changes to its existing contract are on the agenda. So CBA represented 53% of its gross written premium in 2023. And with that in mind, I did catch up with, stock of the day was going to be in there. That's okay. It's off by 21%. You'll just have to wait to hear what my guest on the call said on that one.
I don't know if I can, but I'll try my best. In the meantime, let's talk to Mark Gardner. Hello.
Good afternoon.
Hey. Lackluster day, but let's talk about these uranium players.
Yeah, well, I mean, look, we're really only playing catch up with the rest of the world, to be honest. I think for Peter Dutton, obviously, commitment to 7 nuclear power plants is pretty significant. I dare say by the time we get around to, the way that how the pace of the bureaucracy moves, perhaps small modular reactors might kind of save their bacon a little bit there. But look, if we want less carbon and we need more power, it's really nuclear's, and like many analysts have been saying this, it's really the clear stopgap solution until we get storage solutions to capture the renewables and get some, which increases the reliability.
Yeah, it's not only that, but I was at a presentation last week and it was pointed out to me that these small modular reactors, nuclear reactors, it's not as if this is new technology. Like, we already know how to make them. We have the nuclear subs. And so they are moving forward with designing data centers with them being self-contained.
Yeah.
I mean, future.
They're the size of a shipping container, apparently. So, and look, and everyone always says, you don't want a nuclear power plant in your backyard, but if it's a shipping container inside a data centre, is it really that big of a deal? You've obviously got radiation through all sorts of medical equipment, etc. So, I think I don't know why Australia, it seems like the polling, Australians are largely behind it. I think once they realise that we get cleaner energy for a cheaper price, they'll be even more behind it.
Yeah.
As the cost of living starts to bite. So, it doesn't have to be forever. I think the technology, when we've gone and committed to the Paris Agreement or Paris Accord, it seemed like 2050 was so far away, but to do a complete energy transition for the entire globe is such a massive project, and the technology wasn't there yet for hydrogen, for, even with the renewables and the solar, you've got to kind of use it at point of generating the electricity. So once the storage technology catches up in the next 10 or 20 years, but you need something to have that reliable baseload electricity in the meantime. And nuclear is just really the obvious answer.
So what are you saying? That Paladin, Boss Energy look cheap when you think about the future prospects? Because this is the thing, is even putting the politics aside here in Australia, the rest of the world needs Australian uranium, and we're happy to export it. We don't want to use it.
That's exactly right. I mean, Paladin's major operations in Africa anyway.
Yeah.
So, but yeah, I mean, we've had a significant pullback. I mean, it's come back from about $17 to about $14 in Paladin, and then and obviously Boss Energy's dropped down to about $4 as well. So like we've had some fairly significant drops over the last month. Like, they're both in production. They're both going to be revenue generating. So they're the two pretty easy, clear choices. And you've got some stuff in the speculative end of the market. I think Bannerman's kind of next, might be next in line.
But do you steer clear of the Explorers, the Aura Energies and the like?
I'd be steering clear of the Explorers at this stage. I think you want to be in people that are, in production. Obviously, you've got the Atom and the URNM ETFs as well that have Cameco and Kazatomprom, etc. So, and the Sprott. We've got URNM on at the moment because it's got the highest percentage of the Sprott physical uranium fund, which has been stockpiling, so it takes advantage of that increase in the spot price. And the spot price has come back from $109 to around about the 87 mark now, so it's not a huge drop. But the uranium ETF in the States isn't that far away from record highs, and that thing moves around quite a bit. So, and they've got a lot of Boss and Paladin in them, so if that spikes overnight, there's been some further money put towards nuclear and small modular reactors in the way of about $900 million from the Biden administration as well. So if those ETFs start to get bought up, you'll see follow-on buying in Paladin and Boss, which are large percentages of those ETFs in the coming days.
Now, speaking of going nuclear as well, we can't go past without talking about NVIDIA. I mean, doubling since the beginning of the year, similar to all our wealth, I think.
Yes.
Let's have a look at an infographic that you've given us in terms of some historical context here. What we've seen with the moves in some of these AI players.
Yeah, so basically this puts into perspective like the biggest ever, adjusted to inflation, the biggest ever rallies or largest companies in history. So Dutch East India Company was part of the notorious tulip bubble as well during that period. But I mean, adjusted to inflation, that's about 9.5 trillion. So in the context of things, bubbles can get even bigger, than where they are. Obviously, you've got Microsoft, Apple, and NVIDIA all around the 3.3 trillion mark, of which, obviously there's been a rapid rise in NVIDIA. Microsoft would be my pick of those three because I think they can roll out AI to everyone's desktop faster than everyone else. Apple, I don't really understand this rally. I think they've really done is white labelled OpenAI, and they've been about 18 months late to the party. So, And they're based on iPhone sales. It's 52% of their revenue. If we do have a dip in retail sales, which we had last night in the States, we're going to have, they're not going to sell as many iPhones. So
it's so interesting though, because on the call today, JB Hi-Fi wasn't one of the companies mentioned, and I hadn't actually thought about it in this context before, but one of my guests was saying that, well, as we become more reliant on AI and it creates more consumer demand, that we will need to roll over our products like TVs or phones and so that would result in strong demand for JB Hi-Fi, but you don't see it like that.
Not in the near term. Probably in the look. I love JB Hi-Fi in the long term. I just think that consumer discretionary sector has been one of the better performing sectors in the entire market this year.
I didn't realise it was still up around record highs for JB Hi-Fi.
So basically, if we start to see those rate hikes really hit home, or the global economy soften, and that's where your most sensitive, part of the market is realistically. So I think you just wait for better prices and have high on our list would be JB Hi-Fi and Wesfarmers, but probably just 10 to 15% cheaper. So we haven't had a correction. I don't think we've had a down 2% day for 330 days in the US, which is like one of the longest streaks in about 15 years. So they're just natural, even whether you believe that AI is a bubble or whatever, it's natural that there is a correction at some juncture. One thing that does concern me is that the weight of money going into the leveraged ETFs, the single stock leveraged ETFs, NVIDIA, is now just blown straight through 2 billion. That's three times leveraged. If that starts to unwind, that will unwind very, very quickly. So it's one of those things that it's very hard to time. But I think there was a managers survey in the US recently that basically said that none of the companies that have gone and spent the money on that AI hardware is seeing any immediate revenue. So obviously they're going to be answerable to their boards when they don't get the results after spending all that money on $45,000 NVIDIA chips. So I think probably maybe either next earnings season coming up in the next month, or possibly in sort of September, October, we'll probably start to see that, not necessarily disappointment, but it'd be far less buzz, and people will be looking for the exit. And if a lot of it's based on leverage positions, it could unwind really quickly. So, but I mean, look, long term, I've compared NVIDIA to Cisco and things before, but I think NVIDIA probably does have a broader product base because they've got the software as well. But it doesn't mean that, we can definitely, as there's an old saying in markets, you go up the stairs and down the elevator, it can unwind pretty quickly. So, and then I think what we'll start to look at is more the software, the up and coming software providers for AI, rather than the hardware providers, because usually that hardware and infrastructure is phase one, but the people that make the blue sky earnings are the people that roll out the software.
I wanted to switch tack, can we?
Yeah.
And ask about the RBA. I know it's a done deal, but just your sort of thoughts on policy moves. And it sounds like Michelle Bullock wouldn't mind hiking if she could get away with it.
Yeah, and I liked the tactic that they took yesterday, was basically putting it on the table, because jawboning a hike can sometimes do the job for you. I dare say they don't want to necessarily hike. Central
Not
banks,
want to, but feels like that might be something that they need to do.
But like I say, jawboning and putting it out there, I think probably does a portion of the job for you. Well, as we've seen with central banks globally now, like the EU or the ECB, basically saying we're cutting rates because we think inflation's going down, sort of just goes to prove that central banks are being politicised globally, and whereas a decade ago, they didn't care what the media thought. They weren't under the pump. Like an RBA governor wasn't sacked for saying the wrong thing ever in history. Powell's job's on the line. It's never been politicised as much as it has been recently, and you're sort of seeing the central banks losing their independence a little bit. They're supposed to be the mechanism that makes the hard choices, and I think it had to be put out there to be put on the table, but I dare say they would prefer just to be higher for longer, like everyone's been saying for ages.
Well, RBA rate cut expectations have faded to 63% for February next year. And it was 90% before the decision. So,
we had seven rate cuts in the US by now.
We knew that wasn't going to happen. You too. But so nothing has changed in your investment strategy. We were always end of the year, and because it's the average cycle distance between rate cycles is around the 500-day mark.
So we were thinking Q4 this year all along, because the market always gets ahead of itself, particularly these days. And but yeah, we may see it pushed out a little bit, but I would be more if you want the market to stay up here, I'd be more inclined to be hoping those rate cuts get pushed further out, because usually the market reaction in the S&P's, if you take out black swans, after the first rate cuts, like down at least 12 to 13% initially. So we'll be like very keen focus on the employment numbers, particularly in the US. We're just sort of starting to see things weaken a little bit. So we've got some manufacturing data, I think, later in the week, out of a few regions. So it might, that may even further reinforce that we're starting to slow down a little bit.
Final quick question. Who had the best question to Michelle Bullock yesterday?
You, of course.
Okay, thank you. We knew that was the right and only answer.
Mark Gardner, MPC Markets, always a pleasure.
For putting
Nice
up
to
with
have you
the
in.
narcissistic host. Thank you.
Now, Juliet, I knew you were just waiting for the stock
Oh,
of the
I
day.
was. Tell me
Really
what
keenly
David Lane
waiting.
and Michael Wayne had to say.
About Helia Group, HLI.
Higher bond yields on one hand is a positive for them. They get higher income on their investments, but as bond yields increase, the face value of those bonds often falls, so that's probably offsetting the positive implications. So there's a bit going on for this business at the moment. So from our standpoint, today's announcement certainly doesn't help what was already a challenging backdrop, so I'll go a sell.
We've currently got a hold on it prior to today's announcement. Potentially with the share price down as much as it is, those who are looking for value may well be enticed by that dividend and by that PE. But as Michael pointed out, they are 53% reliant on CBA. So if you are investing in Helia, you're taking the chance that they retain that contract.
Pretty lukewarm, all in all, on Helia Group, which used to be called Genworth. So the penny dropped for me when I was doing my research as well. So there you go.
Glad I waited for Michael Lane and David Wayne's thoughts. Let's get to the leaders and laggards in the day session. Telix, of course, we've been talking about a good one. Some of those uranium players like Deep Yellow having a good day, obviously, on that Peter Dutton update. Light and Wonder also in the small cap space, Genesis Minerals and Sigma Health too.
Yeah, no news associated with those ones. Sigma Health has been, slowly gaining after a sell-off last week on those real concerns about the ACCC. Helia Group was a worst performer on the 200, down by more than 20%. That's a pretty steep fall for that company. David Lane seeing a bit of value in there though. QBE segment closure should be viewed positively according to Citi analysts in a note. Still though, shares down by about 4%. Beach Energy broker moves in the wake of its news yesterday, and Reliance Worldwide has put out its announcement or when it will be releasing its announcement, but it was, I can't really see any news associated with it today.
All right, let's get to the small end of town. Encounter Resources with a nice 20% lift. Findi, Firefly Metals, Southern Cross Gold and Tyro Payments also having a good session. Yeah,
interesting to see Findi there. It's quite a big jump. It did have an investor presentation. I can't remember who was saying they were at that investor presentation, but obviously many were impressed, you could say that. Flipping the page to some of the laggards, and I can't see any real news there that I know of, so we'll leave it and get to what we're expecting tonight.
Yeah, so US markets will be closed for Juneteenth. May CPI, though, coming through, MBA mortgage applications, the NAHB housing market index, and consumer prices out of the UK as well.
That's an interesting one. We have the BOE this week, of course, and very much in the full throes of an election cycle there. Tomorrow, here, the big one that will garner all of the headlines.
Guzman A. Gomez.
Backing the burritos? Is that another?
Spicy IPO. Will you nibble at this one? There's so many. Meanwhile, you can wash down your Guzman A. Gomez with a nice wine. Treasury Wine Estates will be handling its business update.
You just spoke with Fennec, didn't you, about that Bitcoin ETF? So that's a good segue into, if you've missed any interviews today, you should check out ausbiz.com.au if you're listening to this in podcast form. That Bitcoin ETF list tomorrow, I guess, timing not great.
No,
when you see
but
the
you
pressure.
never know with crypto. Something else could happen. Donald Trump could talk about it overnight. It goes up
geez.
$1 billion%.
Yep.
China loan prime rates, New Zealand first quarter GDP. And that does it for this Wednesday on a day when we've been pretty flat. Oh no.
I've got a
Sorry.
little special something here. Speaking, just to go with the theme from Mark Gardner. So this guy is pretty funny on Twitter or X or whatever we want to call it. So he says Nvidia's up 203% over the past year. They make futuristic computer chips. Do you remember Abercrombie and Fitch?
I do.
Up 406% over the past year. They make cargo pants. So I didn't believe it. I went and checked out their share prices. Well, you know Nvidia and the amazing story that it is. Do we have the chart? There you go.
Yeah.
Sure enough. Oh, Abercrombie's not on there.
And I think this chart is not working because obviously we know Nvidia is up, not down, 69%.
Yeah.
So
there goes my story. We should have used full screen, but if you do, can we see Abercrombie? Because true enough, I mean, this was a clothing company that was down and out, very passe.
411%. Yeah, wow. Incredible.
Okay.
All right, cargo pants for the win. Are they going to take our jobs as well?
No, I hope not. I've never seen you in cargo pants. And
I've been in cargo pants when I've been backpacking. Can you believe? Yes.
There you go. So a bit of buying there. The S&P ASX 200 did close relatively flat. My computer's just
I think
died.
it was down about 0.2%. Yeah, well, actually a 1/10 of 1% on the close, down 8 points, 7,769. That drop from QBE certainly weighing. It was off by almost 5%. All right, we'll be back tomorrow.
Yeah.
We'll be really just looking at what happened in Europe, given no lead from Wall Street. But of course, another busy day as always in markets.
Yep, we'll see you then. 9:45, we're live.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil,
Oh, hey, Ken.
here we go.
You still trading?
Pepperstone, trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better.
Still fine with it.
Use your racket.
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it.
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious.
Don't do that.
Ow.